All right, we have some breaking news from Europe. It's IMF news that has nothing to do directly with Dominique Strauss-Kahn, believe it or not. That organization has approved a 26 billion euro loan to Portugal. That's part of an assistance package from the EU. This comes as Greece had its credit rating cut 3 notches by Fitch today. Greece, different country, but similar kinds of problems. We're joined now by one investor who's finding it harder and harder to be upbeat about the situation in Greece, although maybe less so in Portugal. Axel Merk joins us live from Stanford University. He manages over $500 million in currency assets. So, Axel, let me just start with your reaction to Portugal, because it just came across the ticker here. You don't think it's an especially big deal?
Well, with all of these issues that flare up, we have to realize there is no silver bullet to any problem. It's a process. It's a process with ups and downs. And for Portugal, it's a step along the way. Ultimately, and we've discussed this before, what's most relevant is that there is an active dialogue between the bond market and the policymakers. The only language policymakers understand is that of the bond markets. And that is why reform is being implemented, even in Portugal with a weak government, and including other countries in Europe where the governments are quite weak. But the bond market is encouraging them. They hate that dialogue, and that's what's moving things forward.
Let's talk about Greece here. I mean, you seemed confident before that this wouldn't result in a default, but now you seem less confident, more concerned about the situation in Greece.
Yes. Well, 2 things. First of all, we think that the problems in the Eurozone should be reflected in the spreads in the bond markets, and the euro can do quite well in this environment. Having said that, and then we also argue, and we continue to believe, that it's in no one's interest for Greece to default on its debt or to leave the Eurozone. Having said that, what happened earlier this week, Trichet stormed out of a meeting. He was very dissatisfied with the progress made in Greece, and he threatened to cut off Greece from the funding facilities and the like. And then, if you take it from Greece's point of view, they are continuing to evaluate the risk versus the reward. The risk of defaulting now is that they have a shock to their primary deficit, which will have an overnight adjustment because getting new loans will be difficult. And so it's been in their interest to extend this. But if at the same time their own central bank lets them, so to speak, down, well, then the political dynamics favor a default more readily. So we're not saying it's going to happen, but the dynamics are shifting. Politically, that might be a choice that will be made. It's the worst of the bad choices available to them. If that happens, Greece will likely fall into chaos, but that may well happen now.
You know, a viewer wrote in earlier and said it looks like Greece weekend, comparing it to Lehman Brothers weekend. Do you think that it's going to be that kind of weekend here? Are we waiting for some ominous news on a Sunday night?
Well, never say never. I don't think it will happen simply because these dynamics need to boil over. We also know that central banks are poker players. The Greek are very good negotiators, and of course you need to push back. And so there will be back and forth. A lot of this drama is playing out in public. I do think it's not yet going to happen. It will happen. It will happen at some point anyway. And the question is when. It should happen later because it's in Greece's interest that they get their primary deficit under control. If they do default now, the only thing they're left with is chaos. Whereas if they drag this on, they can institute more reform. And so that negotiation will also go internally, and it shouldn't happen at this stage. It will happen sooner than we would like, but I don't think this weekend is it.
If we do, though, at some point get a Greek default and the ECB says we're not going to help you out anymore, I mean, is it at some point in the interest of the Greeks to go back to the drachma, to break out of the euro currency?
The problem Greece has is that their public administration is a mess. They don't know how to collect taxes. They have some structural issues to deal with. What Greek product will you buy if Greece were to have its own currency? The only product I can think of is tourism. Now, tourism is going to improve anyway because of the Middle Eastern turmoil, and Greece, being in that region, is one of the safe places. And so they'll get a boost from tourism independent of whether they're part of the euro or not. And that's something that's good. But beyond that, Greece has some very fundamental issues, and they need to address those. They won't fix them perfectly, but they need to be on the road, continue the reform process, and then they have more choices. Then they can make a choice that, all right, we have so much debt, we want to write some of it off. But if they simply default now, they'll have an implosion of the financial system. They won't have tackled their structural issues, and then they'll fall into chaos. It's not in their interest to do this at this stage.
Axel, 10 seconds here. Are you bullish on the euro still?
Yes, medium term, certainly. Obviously, as these issues clear up, we have some hiccups, but it is more difficult to spend and print money in the Eurozone. This dialogue is wonderful. We don't have that dialogue in the U.S. The bond market is too benign on the U.S., and as a result, in the Eurozone, because we print and spend less money, the euro should strengthen over time.
Got it. Axel, thanks so much for joining us. Axel Merk there from Merk Investments.